Welcome to the session on accounting process. Today I am going to discuss about the meaning of accounting process and the golden rules of accounting along with the example. Let me know what you mean by accounting process is. Accounting process is a complete sequence of accounting procedure which is repeated frequently in the same direction during an accounting period. It means to say, so according to the rules of accounting, so we are going to record each and every transaction to know my financial status, and this is repeated in nature in each and every transaction. Here we have some golden rules of accounting. Let me know what are all the golden rules of accounting we have. The first golden rules of accounting is personal account. In personal account, we are going to consider only the person name or else any institution name or university name, or even we are going to consider the firm's name and industry's name. So if it is concerned to that transaction, we are going to use this account rule. The rule of personal account is debit the receiver and credit the giver. The second one is real account. Here I am going to consider the item of balance sheet. Either it may be liability or else an asset. Such type of transaction we are going to, for such type of transaction we are going to use real account rule. So the rule of real account is debit what comes in and credit what goes out. The second one, the last one is nominal account. Nominal account, here we are going to consider P&L account items. The rule of nominal account is debit all expenses and losses, credit all incomes and gains. And this is what the golden rules of accounting we have, and these rules we are going to apply in each and every transaction to know my financial status. With the help of this rule, we are going to prepare journal, ledger, balance sheet as well as P&L account to know my net profit. So here we have a basic example relating to this. So we'll go with that basic problem. Classify the following into personal, real and nominal account. So first we'll go with the first question. Saraswati account. Saraswati account, here they have mentioned the person name. As I said before, if any information or any account which concerns to the person name, we have to go with the rule of personal account. So this belongs to personal account. Second one, Bangalore University account. Again, this is what we call it as such type of account we are going to consider as artificial personal account. So this is mentioned about university, so we have to go with the rule of personal account. And ABC firm account. ABC firm is also belongs to artificial personal account, so we have to go with the rule of personal account. Prepaid expenses account. Prepaid is also an item of personal account. Capital, here we are going to prepare capital account. If in the capital account we are going to mention the partner's name, so that we have to go with the rule of personal account. Outstanding expenses account, item of balance sheet, so we have to go with the rule of real account. As I said before, so any item which is concerned with the balance sheet, such type of information we have to go with real account rule. So bills receivable, cash is coming in, we are going to record this bills receivable on asset side of the balance sheet, so we have to go with the rule of real account. Bills payable, cash is going out, and this is a liability item, so whatever if it is concerned to the balance sheet, we have to go with the real account rule. Investment, item of balance sheet, and this investment account we are going to maintain a separate head on asset side, so we have to go with the real account rule. Goodwill, item of balance sheet, and this is an item of fixed asset, so we have to go with the rule of real account. Loose tools, this is also an item of balance sheet, and this we are going to record on the asset side under the head fixed assets, so we have to go with the rule of real account. Depreciation, this is completely an expenses. Any expenses which we are going to consider, that item we are going to record in the P&L account. So any item we are going to record in the P&L, we have to go with the rule of nominal account. So depreciation belongs to nominal account. Insurance, this is also an item of P&L account, so we have to go with the rule of nominal account. Dividend, this is also an item of P&L account, so we have to go with the rule of nominal account. Income tax, nominal account. Kindly wait for my next further concepts.